Now it's time to invest in energy stocks, not just simply trade them, but let's look at the bad versus the good. What are the bad names that you're taking a look at?
Right, and we got to look this way, Jill, because there are two kinds of energy names. Just because we believe that oil stocks are going to be good for the long haul, they're going to make up that kind of lag that they've had to other sectors over the last 2 years. So I think in 2016, oil stocks are going to be the place to be. But that doesn't mean that you can haphazardly select oil stocks. So we have to be very careful what we do. One of the major problems with some of these energy companies is that they've tried all sorts of financing tricks to try and stay alive while oil has been below $50 a barrel. And one of the worst, or at least one of the leaders in doing all sorts of these financial tricks, has been Halcon. Recently, they bought back bonds, but they did it in a very mercenary way. They sort of held bondholders at the point of a gun, said you're going to take a haircut, you're going to take bad stock in lieu of debt, and we're going to do this only for a certain number of bonds. So in fact, the horrors that we're putting upon you, the rest of the bondholders are going to get it even worse. And in that way, they've managed to refinance quite a bit of bonds, continue to keep the clock running for a certain period of time. I don't care what kind of, in the end, I really don't care what kind of financial tricks some of these oil companies play. In the end, they're the walking dead, and you don't want to have anything to do with it. That's Halcon, Sandridge, Goodrich, these names.
Even Halcon at $1? Don't go near it?
Not on your life.
Well, because there's other places.
Definitely not the common. The common is being diluted through all of these bond restructurings, and you don't want to be holding the common.
Let's go back and revisit two companies that you do like, and we've spoken about them even when you were really against the oil trade,
right.
EOG and Hess. It's kind of nice to hear that EOG trade investment come back into play.
Yeah, that's right. And this is an example of one of those long-term really good plays on oil, because EOG has acreage that will last for decades, that can deliver the kind of results that they're already delivering in shale. Many of the marginal players are really dealing with very small amounts of acreage that once those start to run dry, they don't have anything to run to drill fresh. And once those run dry, they'll be toast. And we don't want those companies. But EOG has a tremendous portfolio of assets. I would say there's others that have a tremendous portfolio of assets that will not have this kind of Ponzi scheme problem we talked about in shale several times during the last couple of months. Hess would be one I would definitely look at. Cimarex at a value. It's not really there. I'd like it closer to 100. But those are names you got to be looking at. EOG, Hess, Cimarex, one or two others. Those are the good stocks to start accumulating now.
Let's quickly revisit a thesis we were looking at the end of June, beginning of July, when you were saying the way we're going to get improvement in the energy space overall is when we start to see industry consolidation, because some of the producers have to come offline. And you mentioned EOG at $75, and Exxon has to be thinking about that. Hess, does that thesis still come into play here?
It does. The problem, of course, has been with all of the financial tricks that have been playing, there's been less value in the space. And so I've been surprised at how slow the majors have been. In some ways, the private equity firms have been in buying up assets from some of these shale producers. I still think it's coming. What it does is it lengthens the bust cycle, and that's really what's happening here. So when I say accumulate for the long haul, what I'm saying is not that oil is going to go from $44 or $45 now to $75 in the next 3 months. It's not. It's going to stay around here until we see some of this consolidation, a little more of this, quite honestly, a little bit of this bankruptcy that I think is going to come from the smaller players.
All right. Thanks very much, Dan. For TheStreet in New York, I'm Jill Malandrino.